Good afternoon, everybody, and welcome back to the Fintech Nexus weekly news show. My name is Peter Renton, chairman and co-founder of Fintech Nexus, joined as always by my good friend and colleague Todd Anderson, coming at us from his home office studio on Long Island. How are you doing, Todd?
I'm well, Peter. Another slow news week to dig into today.
Exactly. And joining us for the second time, we have Nicole Casperson from Fintech is Fem, coming at us from a hotel room in Las Vegas. How are you doing, Nicole?
I'm doing well. I'm keeping my immune system up and healthy while in Vegas. So
All right, that's not easy to do.
Feeling great. It's the challenge of the week.
Yeah. Indeed. Okay, well, as we said, we got a lot to cover here. And we have to lead off, of course, with banking news. And, it already feels like 2 weeks ago, but it was just on Monday or Sunday. Actually, it was Monday morning, very early in the morning, that we got the news that First Republic has been seized by the FDIC and sold to JP Morgan Chase. And, Jamie Dimon from JP Morgan.
That still works.
Coming to the rescue again. So JP Morgan, this is the second largest bank failure in history. The largest was Washington Mutual, also with JP Morgan to the rescue. So top two largest bank failures in history. We've got JP Morgan to thank. Anyway, crazy times in the banking space. Todd, what do you think? What are your thoughts?
Well, he is the super Fed president. Yes. Kind of supersedes all the other in government. Little did we know when this deal actually happened that we'd be where we are today, and in some of our next stories with other banks now teetering, one claiming that they're not anymore. But it felt as if this maybe was the end of the crisis, and we were hopeful. But I think it goes to show you that there is a fair amount in banking that is unsettling right now. And while JP Morgan consolidated and is probably the top bank out there and consolidated a bit more power with this move, I think there's going to be a lot of people across either regulators or legislators that don't like the fact that JP Morgan is continuing to acquire power in the banking space. And I think we're going to hear more about that in the coming months or years. Today, it's more about where the crisis is, but I think over time, we're going to hear how did we let JP Morgan continue to get this big?
Yeah, that's really interesting, thinking of just the kind of compounding effects, right, of something like this. Like JP Morgan Chase can't always come to the rescue, and if they just continue to come to the rescue, what then happens to the banking system in a few years down the road? I love that we're talking about this. We should think like this always. It's very difficult to do, though. We always want to solve the issues right away and kind of make problems go away as fast as possible. But for me, I also think a lot about how, just diversification, how diverse is JP Morgan and their offerings, because and their depositors and just even the clients that they serve, because that's how they're capable of managing all of this, right? When you have, for the other banks, that are kind of falling off, if they, had maybe more diverse client bases, even though that wasn't necessarily their business model, but if they did, didn't have as many people who knew exactly how to take out, over $250,000 right away, maybe some stuff like this wouldn't happen. But anyway.
Yeah, it is. It is a little crazy when you think about it, that the largest bank is getting a lot larger. And what does that mean?
It's also, the boring business of banking is supposed to be boring and in many ways risk averse, but yet some of the, I guess, most stable, we would have probably called them if you in the last couple of years. Obviously they weren't, but we would have thought of First Republic and others as quite stable, have turned out that, some of their just basic risk management stuff wasn't followed. It's like they were just, all right, this will eventually, pass, or maybe, our depositors are always safe. They've been with us for 20 years. I think there was a lot of sitting on their hands, as if this, where were they months ago looking at, here's the interest rate risk. Why not run 12 scenarios and we're screwed in 10 of them?
Well, I think it was a lot of hubris, actually, because they thought, we've got a very loyal deposit base. They're not gonna leave us. So we're gonna be fine if we if we need to, we're not going to have a deposit run because we have loyal depositors. But
it's like it's like who doesn't pay off their mortgage?
Right. And
lives.
When push comes to shove, if you are worried about your $1 million deposit account at First Republic, you're taking it out. You're not going to show loyalty because it's your money. And so that's really what they misjudged the loyalty of their customer base. I think that was probably the biggest mistake that they made.
And maybe misjudged the the lack of diversification of that customer, right? Like you can't just rely on the one customer for however many years.
Yeah, that is very true. Anyway, we need to move on to another banking story. 2 banking stories to lead off. It's a little sad, actually. There's only 3, I should say. PacWest and Western Alliance Bank. So PacWest, Pacific Western Bank. These banks had a very bad day today. PacWest was down over 50%. And Western Alliance Bank was down almost 40%. Shareholders just really worried about it. Is the next domino to fall going to be these? And it's funny because banking is a confidence game, and there's confidence lacking right now. Even though Jamie Dimon came in, even though the FDIC came in, there's still a lack of confidence in some of these banks. And it's like we may not be at the end of this crisis, as Jamie Dimon implied or even said that on Monday morning, there could be more dominoes to fall.
One angle I haven't seen covered very much in a lot of the news stories related to all these bank failures is how much has fintech impacted how people interact with banking, in that there's 100 options now. I'm not going to sit with First Republic forever. We can just move our money into Chime or whoever. And I know a lot of the depositors that are losing or their money's at risk here is a lot of ultra wealthy people, and they fall well above but in general, the customer base, to me, I think fintech has had maybe a bigger impact than has been studied or talked about yet, because there's just so much more out there that people don't need to say, all right, I need to stick with First Republic. My parents were there. They can just yank their money and go, hey, I'm going to put someone SoFi or Chime or whoever, and I could zip around. So I can open up an account in 2 minutes, and I can have a new bank account. I don't need to worry and sit with First Republic to see where they go. I don't know how much it's impacted, but I'm curious if over time we find that the vastness of what fintech has begun to offer, if that's impacted some of what we see going on here.
I mean, I wonder if that tells us that there is still this lack of awareness of fintech and what it is truly capable of doing. It's easy, right, for us in our fintech bubbles and kind of circles, right, to think that, right? Okay, of course, there's so many options out there, but I mean, even in my day-to-day, I'm still, while the conversation is definitely progressing, it's slow, right? It's still, I'm still telling people about SoFi for the first time, or Chime, or, any of these major, neobanks. And so people are still shocked to see my SoFi card when I flip it out at a dinner table. And it just, seriously, it just reminds me that the reality is, man, I think this should be widely known knowledge. And it still isn't. So that would be someone should do that study. Where is fintech brand awareness at right now?
Yeah, well, that's a very good point. I mean, there was that study done by Momentive, right? We just had a webinar with them. They did a study about awareness of digital banking, and there's definitely more. It's growing, but not probably where it should be. But I think the thing that fintech has done, I think, that has made the banks lift their game and made it easier to open an account. So when it's easy to open an account, okay, you can pick your First Republic bank account. You can have maybe $20,000 in there, or $200,000 if you're wealthy, and then put the rest of the money in SoFi, where you can earn. I'm earning 4.2%.
Or Apple.
4.2.
Yeah,
or Apple now.
I know.
Yeah, but Apple as well. Apple was less than 60 seconds to open an account there. So
we did it. I did it live on the air. Was it two shows ago?
You did? Oh my gosh! I thought about doing that.
Yeah.
Oh.
Well,
so anyway,
Peter and Ron were talking, and I just did it, and I said, "All right, Peter, I just opened up an account," because he was wondering how fast it took, and it was like 55 seconds.
Yep. Anyway,
someone had to do the experiment.
we're going to talk about Apple in a second, but I want to go to talk about the FDIC first, because this is the last of the banking stories around this. Because the FDIC basically said on Monday they released a paper basically talking about the crisis, and they're saying they're looking at raising the insurance cap for everybody, or treating business accounts differently. They're the two main sort of topics on the table. That's why I think the thing that's come out of this is that if you're running payroll for even a medium-sized company, you've probably got a 7-figure payroll that you're running every 2 weeks. You got to have that money be protected. I mean, I think in 10 million, 25 million, that money has got to be protected. So I think we're going to see changes there. But apparently, Congress is the one that has that actually act.
Yeah.
That ain't going to happen.
That's the unfortunate part.
They got other things in their mind right now.
So maybe in like 10 years we'll see it. We're lucky.
I mean, it seems a natural evolution of where we were in SVB to where we are now, to rethink deposit insurance for small businesses or medium-sized businesses. But also, I mean, when you start unraveling this a little bit, you mentioned the payroll accounts. I mean, what about when we're at the point of people getting access to pay every day if they want it?
Yeah.
And Fed now coming. I mean, how much more and fast are some of what we're seeing, an unraveling of the bank or some of these crises that will come out of nowhere because of how faster the technology is, and we're not even there yet. So I wonder, like, are we in for this long haul of banking issues related to maybe some of the technology coming in behind the crisis? And what does that mean going forward, and how we think about deposit insurance and payroll and where money moves and how quick it moves? There's just so much that I'm starting to unpack in my own head of how this can be impacted in the next few years. I think banks are, might be in for a big shock if they haven't been already.
Yeah, I think you bring up a great point in terms of payroll. I mean, when I rethink about the weekend of SVB's collapse and that crazy weekend where we all got to work at the same, all weekend, remember that?
Right.
Yeah, and well, I think that one thing that was kind of amazing about that weekend was how much everyone was willing to help each other to ensure that people could make payroll happen. Right. Everyone wanted to make sure that their people were taken care of. And I love that we were focused on that. And it makes total sense to create some sort of policy to ensure that is not a thing we all have to worry about all weekend. I'm trying to enjoy my friend's birthday dinner. And meanwhile, I'm like, are my friends going to get paid? Am I going to get paid? What's going to happen to our livelihoods?
Right.
And at the very least, we should have policies for that. So that would be ideal.
Yep.
I mean,
anyway, moving on. We're going to talk about Cross River Bank. This came out Friday afternoon. The FDIC slapped a consent order on Cross River Bank. This actually happened in March. We're just finding out about it now. Focused on their fair lending program. I was a little surprised about this, to be honest, because Cross River Bank, the pioneer in the bank fintech partnership space, they've been doing lending for more than a decade. And this was a ding on their fair lending program. So I was a bit surprised that apparently there's no major major things they have to change. They've changed a whole bunch of things already. They did say now the FDIC has made them say that any new lending partners they bring on have to be approved first by the FDIC.
Oh.
So that's something new, but
regulatory scrutiny is coming.
Yeah.
For more of these. Evolve should be worried, and others that are kind of the conduits of a lot of the fintech ecosystem. And I think the regulators kind of gave a hint to that, and this is kind of that first piece of it. That, hey, we're looking at your business models more closely. We're looking at exactly what you're doing more closely. Some of this falls on the back of everything that happened with FTX and crypto. It's kind of like this regulatory onslaught in a way. And I think right now, I think fintech's going to be in for not necessarily a rude awakening, but a slowdown in kind of how they progress with partners. They're just going to get a lot more scrutiny.
Yep.
I like where your head's at, Todd, because it's thinking of it very almost like incremental, and maybe this is going to be like a slow burn, which I guess when it comes to anything regulatory, that is bound to be the only
That's the
option.
standard.
That's what we're dealing with. So yeah, I mean, and it is kind of, you know, wild to think about, but it is something to pay attention to, because I think you're right. We're going to see this kind of pop up more and more, and maybe in unexpected places. But I mean, if this is how the regulatory atmosphere kind of needs to go, then we all are here for the ride, right?
Yep.
I do like not want too many like barriers though for fintech bank partnerships. However, you know,
Yeah, well,
we got to keep those.
That's probably
fear.
that is it's probably going to become different, because
right.
there's more scrutiny about bank fintech partnerships now. So there's going to be more friction in those relationships, and I don't think there's much we can.
You also have this dynamic of there's some fintechs out there like, hey, you can go live with a product in 3 weeks, 4 weeks. And banks today are be like, we don't want to go live in that quickly. Like, you know, we go live in 3 weeks, we're going to have, you know, whoever our regulator is, state or federal, knocking at a door and say, hello, you know, did you guys do the due diligence here? So I think I'd be curious how some of the language changes in the next, say, 12 months with fintechs. Like, hey, you can go live in 2 weeks. And banks are like, well, how about 2 months?
Yeah, exactly.
Yeah. Maybe that could be a good thing.
Yeah,
yeah,
it could be. Anyway, moving on to Apple, which we've already touched on. And thing that was interesting about the Apple savings account, we got some data of what happened in the first week. So just under $1 billion, $990 million in deposits came into Goldman Sachs, Apple's bank partner, in the first 4 days of launch, where that was that basically is 240,000 accounts, $4,125 by my math per account. They're not allowing you, Apple is not allowing you to go over 250K. So it's all going to be FDIC insured. But still only available. You've got to have not just an iPhone, you've got to have an Apple card to be a customer. And you know what? I checked, I spent 5 minutes today trying to find where I still can't do it. It's not available to me. I've had an Apple card forever since the first week, and
maybe they got something against you, Peter.
Maybe it's me, or maybe I did something wrong. I don't know. But anyway, Apple seems to be doing well.
Yeah, I mean, this goes to show you that, you know, people obviously like Apple products, and you know, I think eventually that regulatory train is going to turn their eyes towards Apple when it comes to financial services. I think today they're okay with, all right, they're kind of inching and they're kind of adding products, and you know, we'll see. But I mean, the best thing about Apple, 99% of the time, is the customer experience is just second to none. As we talked about, I did it in 50 seconds on this call a couple of weeks ago, and it's hard to beat a product that you can open it up that quickly.
Yep.
So true, so true. I do wonder if this is a hype cycle, right? Yeah. I mean, $1 billion in 4 days is crazy. And I do think that Apple has a ridiculous, you know, loyal customer base, and way to go for Goldman Sachs to have that complete access to it. But we'll see. I mean, I'm just curious if that type of momentum happens in the long run, or if this is kind of a
good point.
I think the 250 could be a barrier, because, you know, especially for the wealthier individual who puts 10 million or whatever at JP Morgan, like if Apple is sticking to 250, I think they're going to lose out on some of the, you know, high net worth people that they might otherwise have acquired.
Right. My main, I mean, I think my main stickler is that, you know, a lot of Apple press releases out there are saying, or blogs are saying how this is, you know, great for financial inclusion. And I'm like, if Peter can't figure it, like, can't get in, I don't know if this is financial inclusion, guys.
Oh, yeah.
Like,
I also think Apple skews towards the people that make a decent living.
Yeah, I mean, you need an iPhone.
Yeah, their products are not cheap. So I know. I had to call. I had to call them out my newsletter. I was like, I can see financial inclusion.
No.
Yep, not financial inclusion. Okay, let's move on. We're going to talk about crypto now. Venmo, and I actually just checked this. This is live on my phone right now. Venmo users can now buy crypto. You've got Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Not sure why those four particularly. Obviously, the first two are obvious, but anyway, that's what you can buy now on Venmo. You can also transfer your crypto to a PayPal wallet. Venmo, it's not very differentiating. It's just, you can buy you can buy it like you can buy it on many other places. But Venmo has a massive number of users, and I'm sure there's going to be a whole bunch of them buying crypto now.
I'm just happy that there's crypto products being added somewhere, and that nobody is totally fearful. And I think the powers that be at Venmo and PayPal probably have a little bit more wherewithal to do this than maybe some other companies. But it's good to see that there's still innovation happening there. And I know we'll go into the next story about kind of the overall crypto community feeling right now. But I think it was interesting to see, at least.
So much positivity there, Todd. I think it does. Yes, I agree. It was giving me, did they not already have this?
Yeah,
because
I know.
Cash App has been doing it forever. And of course I have to be a customer on all these things because I got to be able to Cash App someone that's got that, or Venmo someone that got that. And I don't know, I'm actually kind of shocked that this wasn't a thing already. And it feels a little like Venmo's like, well, we're slow to join, but we made it.
Yeah,
so here we are.
Yeah, no awards, no awards for speed there. That's for sure. But it's funny because I was at Consensus last year, and we're going to talk about Consensus in just a little bit, the crypto conference. And the CEO of PayPal was there, and he was so bullish on crypto. Just had all these initiatives that were in the hopper, and not much has come out of it because they've sort of put everything, they've shelved a whole lot of these projects, but that's one they thought it's a light lift, probably. Let's just let Venmo have crypto, because Cash App has had crypto for 5 years.
And PayPal's had it for a while too.
Yeah, exactly. Anyway, so talking about Consensus, we had our colleague Isabel Castro there last week. It was pretty positive vibe at the event, supposedly, and but they did a poll, and it was interesting. 90% of the attendees felt that regulation is the most pressing issue facing crypto. I don't know what the other 10% were thinking, because it's really, if you're maybe they weren't from the US, that would be, it's not, if you're in the US, it's all about regulation right now, it seems. And a lot of people complaining, the SEC is just being a bully in the crypto space. And there's one company said the first contact they ever had with the SEC was when they received a Wells notice, and so no letter saying, hey, we don't like what you're doing, can you stop? No, just straight on to a Wells notice. But Patrick McHenry and Cynthia Lummis, both on Capitol Hill. Patrick McHenry runs the House Financial Services Committee. Cynthia Lummis is on, I think, the Senate Banking Committee, and they came in they talked via video chat on to Consensus, and they're trying to champion actual legislation. I'll believe it when I see it. What do you guys think?
I mean, it's quite the climb uphill right now. I feel for the crypto space right now, because I think not only was there skepticism, I think, in Washington to begin with, but I think a lot of people feel hoodwinked by what SBF did, and they're kind of taking it out on the rest of the entrepreneurs in the industry, as if we can't let this ever happen again. How do we get to that point? And they have, as we've talked about many times on the show, they have a politician running the SEC, and it's I just don't see a path right now. I mean, McHenry's very savvy, and Lummis, it's good to see their enthusiasm for legislation, but I mean, where is the real path? I don't see it right now.
I mean, I think the real path is if we can ever get past all this divisiveness. It's like crypto is almost like synonymous with like the political atmosphere at this point. It's in a way,
crazy.
Right. At least in some of the conversations that I see, and in the way that I see it play out on the internet, right? It's like you're either 100% for it, and you're whatever pill you swallow, and then you're either 100% against it, and it's the worst thing to ever happen. And it's like, just like literally anything else on this planet, we're gonna have to find a middle ground for crypto to go anywhere.
Yep.
I mean, and I want to see it. I want to see it happen because I know that at the end of the day, the point of blockchain technology is to increase global financial inclusion for everybody. So if that's, and make this whole system work better for everyone. And if we want to get there, it's going to take a lot of time.
Well, it already is.
And then, you know,
that's the part I don't
and
get.
it is
why they haven't jumped on it, like the legislators and regulators on the inclusion aspect of how some of this crypto stuff and the trading and people trying to get rich quick, put that aside, but the technology is very powerful and can be very powerful and level a playing field in a lot of different ways. And it just seems like there's no appetite even for that, which to me is the most surprising part of this.
Because it's like everyone's either too one way or the other. And it's like, can we just remember what this was created for to begin with and not be so, you know, blindsided by everything? There needs to be a little bit more open-mindedness, I think, just across the board. It's like we got distracted, but there's like too many Bored Ape pieces of art. Yeah, and now we all forgot.
And I think, you know, the whole SBF for FTX fiasco has just hardened people. And you know, I feel like that's that has, you know, even before that, I mean, there was a few blow ups. You had Celsius and you had the 3 Arrows Capital and you had Terra Luna and all those
it's kind of like they were teeter, and then FTX came in and it was like right off the cliff.
Yeah, no, then they've thrown the baby out with the bathwater now.
That's a shame.
To share a little more positivity though, it is almost like the rinse off, right? It's like, okay, so whoever wasn't a true believer in this and didn't really want to see this take off into the amazing way that in place that it can be, then good. Like, let the adults be here and make, you know, crypto and blockchain what it can be.
Yeah, so, I mean, that's and just and on that note, I mean, I thought consensus would be way down as far as attendance goes, but it was only down about 10% from last year, and that I think is a massive.
It's a good sign.
And so it means that there are still a lot of true believers out there that think this is changing the world, and we're just going to work through the bear market. Anyway, we're going to end with good news because this was a paper released yesterday morning from QED investors and the Boston Consulting Group talking about fintech in 2030. And this is some rigorous analysis that was done. And I've spoken to both BCG and QED people about this report, and it's basically saying it's taking actual numbers. Right now, we have fintech is responsible worldwide for $245 billion in revenue. Okay, and that is that is on a $12.3 trillion total financial services global revenue. So you got 245 on 12.3. It's like 2% of the total. We got a long way to go, and they basically are saying that, you know, we're going to go from 2% to 25% in this next 7 years. Which and the good news here, and you've been talking about this, Nicole, 2.8 billion underbanked people in the world right now, and fintech are the ones who are going to serve these people, and it's going to happen this decade. And I think this report, you should I downloaded it. I was reading it on the plane yesterday, and it is really just some staggering statistics that they've put together. Even if they're not completely right and they're overshooting, we're in a good spot in fintech. That's how I look at it.
Hell yeah, I love that. Thank you for bringing the optimism. I haven't been excited to check out a report in a minute. I'm not gonna lie. So I'm excited to get to that. I'm like, positive news, yes. Honestly, even though 2% that feels small, but I mean, it's like fintech is still, you know, we're also still the grown-ups have finally come to play, right? In fintech ourselves, we've gone through our growing pains, still are, and I think that that's like such a positive signaling. And also just looking at how much more room we do have to grow and to kind of take over, right? But yeah, I think consumer fintech is definitely not dead. I would like to debunk that thought process. And exactly right. We have this capability of being able to serve this, and I love that someone made it a report to acknowledge that, because come on, we can't lose sight of what we're here for.
Exactly.
Just because some, you know, bad waves happen.
Mm-hmm. Mm-hmm.
I mean, bad waves happen in like everything.
Everything.
It's just amazing how, like, you know, how much is thrown on, like, oh, there's bad actors in crypto. Yeah, well, we have Bernie Madoff too.
Yeah.
There's correlation. You can find someone else on the other side of the aisle pretty easily in almost any example. I think the most amazing thing is, I think today, I think a lot of tools have been created, and now we're going to see the wave of those tools reaching the people that need them the most. So like that first wave was, all right, here's how we do this. Here's how to open an account in 2 minutes. Here's how to use biometrics while doing that. All right, now let's get it out into the people that need it most. And so I'm curious to see how that next wave works. And I'm still a little surprised that post-COVID we haven't seen this like new wave of companies. I was expecting like, all right, this next grouping is going to start coming up, and it's been a little bit slower than
Well,
I thought.
you talk to the seed and pre-seed investors, it's coming. There's thousands of companies.
Well, yeah, I mean, but
they just haven't reached
it feels a little bit slower than I would have anticipated at this stage.
It's
Plus,
coming.
part of it is the mark's kind of turned too. So,
indeed. Anyway, we have gone over.
Okay.
Last comment, Nicole. Then we can be done.
I was going to say positive note. From what I'm hearing from founders that are optimistic, right, and working with VCs, it is the best time to be building, right, during the downtime. So,
yep, indeed. Anyway,
right.
we are out of time, and before we go, Fintech Nexus USA is happening in 6 days. Nicole's going to be there. Todd's going to be there. I'm going to be there. Thousands of other people will be there, and
that's right.
You can still get your ticket. FintechNexus.com. You can get your ticket and right up until the day. Don't miss out. It's going to be fantastic. And we will obviously not have a show next week because we'll be at our event. So you should be there too. On that note, though, thank you, Todd. Thank you, Nicole. Great to have you back. Thank you for listening or watching. Appreciate your attention. And see you in New York City next week. Bye.
Yeah.
See ya.